This is the Bank Nifty daily charts. Interesting day today. What started off as gap up, came down and made an amazing recovery today, almost touching its 20-day moving average, but has closed around 37,945, about 800 odd points away from the 20-day moving average. But let's see how the day went for us. This is the 15-minute chart. Market opened up at 38,360. Yesterday it closed at 38,171. Straddle opened up around 1,126 and it closed the other day at 1,144. Now this is for the 7th October expiry and not the 30th. The reasons we've been doing that is because we're getting wider sort of ranges, bigger premiums. So we have a more sort of buffer range to handle what were big moves like today. So, what we were doing, as I discussed yesterday, is 38,300 was going to be a critical level. The market opened up higher, breached it, created a new high, but immediately came down straight after. Sort of consolidated for a few minutes and then broke what was a first support level around 38,050. Went down to 700 and then actually broke even 34 400 levels. So that was an interesting move, but the minute it broke it, made an amazing recovery straight up. So that's what the market was like today. It was interesting in case of the open interest as well, around 1050 or so, which is around this candle or so. Yeah, let me zoom in a little bit. Around this candle or so, calls were written at 38,200 and puts were written at 38,000. So I was thinking, will it be a range bound day between 38 and 38,400 potentially? What ended up happening is once this broke and started this momentum downwards, we started selling some calls out of the money. We were selling calls at the rate of strike prices of 39,000 or so. IVs were high. One of the reasons why we've not been getting a DK is IVs were high, which means um, the sort of range that we can potentially build is also bigger. It also means that there are potentially volatile moves like how we incurred today. I know at around this level, which is 37, 400, 500 odd levels, we then sold a put at 36, 500, which is 1,000 points away, and we were still getting around 170, 180 rupee premium, and that gave us a considerable benefit today itself. But overall, sign of caution is definitely there. Towards the end of the day, the option chain, both calls and puts, which means bulls and bears, both moved very far out of the money, creating a very wide range. By the end of the day, the calls were written all at around 38.8 and 39,000, right? And the market's at 37,900, so 38 odd thousand. But these guys have all written calls around 38.8 and 39,000, and the puts also on the same side have written at 37,300 and 37,000. So there's a potential big range tomorrow to actually work around in. Overall, again, we're slightly delta negative. By here, we were actually delta positive, but this move again made us slightly delta negative. It's interesting to see what will happen tomorrow. Now, this support's gone, this support's gone. This will be an interesting place to watch out for. We'll have a potential resistance around these levels. Um, 38, 200, 100 odd levels, right? So 38, 100 to 200 levels is going to be a sort of zone that's there, a resistance zone. This zone is taken out and I can't see another zone, but I would still mark this 400 odd levels, because from here the markets moved up and from here it's come down and immediately bounced. So there's a lot of support here. Even though I don't have a zone over there, I would definitely still be aware of 37 400 ranges, because I think there is tremendous support around these levels, right? So I think 37 400 or so. Um, our plan for tomorrow is this. We have to see what the market does in the first few minutes of trading. Now, S&P 500's taken quite a beating. It's about 1% odd down, almost 2% down. Dow Jones is also down. Global markets overall look slightly weak, so maybe there is some sort of trickle down effect that can sort of impact us. First thing we got to see in the morning is what happens around 38 100. If it breaks 38 100, we've got 38 400, and then sort of again all time highs, so sort of open skies. On the put side, I would think this is a big candle, so I would mark 50% of this, which looks around 37 650 or so. Let me mark that and keep, yeah, 37 650 or so. I'll calculate it properly, but it looks like yeah, maybe around this much looks like a potential support. So we got to see what happens around the 37 650 odds ranges, and what happens around 38 or 100 odd levels to figure out big ranges. My big concerns is we still have one gap that still needs to be covered. This gap that was created 2 days ago got covered today, so this gap is still there. And overall, if I look at the 1 day charts, we can see that the market's still kind of far away from its 20-day moving average. What seems like a red candle is sort of a big bullish move, because it's come down and recovered that just as fast. So what would look like an engulfing, completely engulfing candle has given us a lot of positive signs as well. Therefore, mixed signals kicking into us. One of the things that we got to kind of just be aware of overall. So that's kind of our play for tomorrow. Again, like always, we're not going to stick to a particular view just because we are slightly delta negative that we hope the market goes down and don't do anything. As the markets come up, like how it did in the morning, we have to start writing calls and puts to build positions, keep up sort of spread wide overall, making sure that we get some decay, which we haven't been getting over the last couple of days because of high IVs, but build it, keep building it, and be agile and flexible enough so that we can end the week in profit.